Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from July 21st to July 25th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from July 21st to July 25th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Canadian PPI data and USCB leading index. Tuesday brings RBA meeting minutes, Fed Chair Powell speech, and US Richmond Fed manufacturing index. Wednesday features US existing home sales data and Australian PMI flash figures including composite, manufacturing, and services PMI. Thursday is the highlight of the week with UK PMI flash data, the ECB interest rate decision and press conference where rates are expected to remain unchanged at 2.15%, US initial jobless claims, Canadian retail sales, and US PMI flash figures and new home sales. Friday concludes with UK retail sales data and US durable goods orders. This week's key market-moving events will be Fed Chair Powell's speech on Tuesday and the ECB interest rate decision on Thursday. Both events could provide important insights into future monetary policy direction and market expectations. Now, let's go to the technical analysis. This week, we'll focus on the British pound against the US dollar and the euro against the US dollar, as both instruments face significant central bank-related events and economic data releases. Let's start with the British pound against the US dollar. Looking at the daily chart, the pound-dollar pair is currently trading around 1.3406, showing recent weakness after a series of uptrend moves. The pair has moved below the 20-day exponential moving average, the white line, which is now acting as dynamic resistance, indicating a shift in short-term momentum. Looking at important levels, the pound against the dollar has support at 1.3255 and 1.3140, while resistance can be found at 1.3516 and 1.3622. The price is currently positioned closer to the first support level after the recent decline. The stochastic oscillator is in oversold territory and showing signs of trying to move higher, suggesting potential for a technical bounce from these oversold levels. Thursday's UK PMI flash data will be important for this pair, with services PMI expected to remain steady at 52.9. Friday's UK retail sales figures could provide additional direction, with expectations of a strong rebound to 2% month-over-month after the previous -2.7% decline. Given the current oversold technical condition, positive UK data could support a bounce back toward the moving average resistance. Now, let's turn to the euro against the US dollar. On the daily chart, the euro-dollar pair is currently trading around 1.1620, showing signs of recent weakness and trading below the 20-day exponential moving average, the white line, which is now acting as dynamic resistance. The pair has pulled back from recent highs and appears to be in a corrective phase. Looking at important levels, the euro against the dollar has support at 1.1468 and 1.1357, while resistance stands at 1.1718 and 1.1828. The price is currently positioned between these key levels, with the stochastic oscillator in oversold territory and showing signs of trying to exit the oversold area, suggesting potential for a technical bounce. Thursday's ECB interest rate decision will be the most significant event for this pair, with the central bank expected to maintain rates at 2.15%. The market reaction will depend heavily on President Lagarde's comments during the press conference and any signals about future policy direction. Fed Chair Powell's speech on Tuesday could also impact the pair through its effect on the US dollar. Given the current oversold technical condition, any dovish signals from the ECB or hawkish tones from Powell could accelerate the downside movement. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Tuesday's Fed Chair Powell speech and Thursday's ECB decision, as these events can cause sudden movements and potential technical breakouts. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.